All right, what is up, YouTube? I'm back once again with another video. I know it's been a while. I've been taking summer classes. The semester is almost over for me. And, when I finish the year out strong and go ahead and graduate from college. So I'm going to go ahead and screen share and talk to you guys about what you should be buying or thinking about buying right now. We see that, the Dow Jones is starting to set records daily now. A couple of weeks ago, we saw NASDAQ and S&P start to set records almost every single day. There was just a mass amount of buying just coming out of nowhere from those things. Now we see a reversal here, and we're starting to see the Dow Jones start to set records. At first, we had problems getting to that 21,000 level. Now we're at 21,300, and it looks like we might be headed towards that 23,500 level. And like I said, we do those incremental values to let you know exactly what technical levels we need to break through to go higher. So 21,500 will let us know that 2,200 is or 22,000 is the next step, and and so forth and so forth, to understand exactly how these indexes work, or the next level for the indexes. So we see the Qs right here. I know this is measuring the NASDAQ. 143.9 is just about all-time high. 144 you can call it. And as we see that the NASDAQ is definitely taking a break right now. We see the RSI, the relative strength index, showing that there's a weakness in buyers, but also showing that the momentum is still to the upside. So we see the NASDAQ is getting checked about $5 low off of its all-time high, and this is the best way you can go ahead and buy the NASDAQ, or you can go buy the NASDAQ stock itself. And all right, so sorry about that. Also, let's go ahead and check out the S&P 500. Now, what we noticed, or if you guys are watching CNBC, is that if you're looking for an S&P return rather than buying the SPY, or the SPXL, another stock that does follow the S&P 500 is Berkshire Hathaway. Follows it just about lockstep. I know the patterns are ugly for Berkshire Hathaway. I'm still in this name. I was able to buy shares just before it hit 170. The reason I bought shares before it hit 170 is because I started to see the Fed raise rates, and once it became time for the Fed to raise rates, I just simply stepped back, started to read. You want to be ahead of those curves. You want to be ahead of every single thing that goes on in the market. So what I did was I go ahead and put an order. I think I bought it at 166, 167. I know the low for this thing was about 160, but I didn't have any money available to buy at that low of 160. But I got in at 167, and the stock continues to go higher because we're starting to see interest rates go higher. Also, airlines are starting to go higher as well, and this is really key for this stock to go ahead and move higher. We have to see airlines, and we have to see banks go higher for the stock to continue to go higher. Now, also, let's check out Take-Two Interactive. We see the market just about having a broad sell-off on all the technology names, video game makers, you name it, whatever. We see that there's a lot of selling going on. We see Trump is now under investigation. We can go ahead and check out our account to see exactly how that's doing. We see we were at one point at 219,000. Now we lost about 10 grand off of that. We see APC definitely going lower. We can probably cut our losses right here and get into something else. What we're going to get into, we're going to create, we're going to just go ahead and sell. Let's create a closing order right here. We're going to sell at market, and we're going to make some of our money back. We're down about 3 grand on this, and it's really going to be easy to go ahead and buy more, or I would say make this money back, because it's just 3 grand that we did lose. And we see Take-Two Interactive, we're up about $800 on that. Like I said, guys, I bought shares at $71, and we're still breaking through those technical lows, and I think the market is kind of bringing the rest of the stocks down with it, and it does kind of suck. But when you look at it long term, what does President Trump have to do with making video games? Absolutely nothing. What does Trump have to do with technology? Absolutely nothing. When you think about it, it's just people just making short-term moves and thinking that it's going to last long term. But what it does is just makes more buying opportunity for other people to go ahead and buy the stock. We see Disney definitely jumping down to 105. I think it was at 104 at one point. Haven't really been, checking in on the market, daily like I always do. But I always understand exactly where stocks are going. And once you're able to understand where stocks are going, you really don't need to, sit there and watch the market every single time. So let's go ahead and create an order for, the triple Qs. We see, Nasdaq definitely getting hit, and we see the RSI is definitely showing weakness. Anytime the market does show weakness, we want to be in there and we want to, buy more. And anytime you do get, we had about what 300 shares about APC. So anytime you see that the market is definitely selling off, we definitely want to check that out and probably look into the names that 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 look attractive. Let's see if we can get some in here. Okay, buying power. Let's see. We just want to get in here at the triple Qs because it does give us a pretty good edge on the market. I'm not sure why I don't have enough money. I'm not sure what the heck is going on right here. We can go ahead and cut out, cut out our leverage oil trade. We see oil is definitely breaking down. Saudi Arabia, or I think it was the Saudis and Qatar definitely cutting their, ties with each other. They see one funding terrorism, the other one says it doesn't, things like that. But those are events that we must pay attention to. You see how I always said that oil is going to $60. Now, with that being said, we cannot, or I would say it's very hard to pick a price target for oil without knowing the events that's going to happen, because these events do play a significant role with the price. So if you guys were buying UWT, or the oils, or any oil stock, hoping that it'll go up, hope you didn't follow my advice on that one, because like I said, I tell you guys, you must read and research to understand where exactly stocks are going. I didn't own this in my account. I wanted to see exactly, what would happen if I started to own this in, the simulated trading account. But that's definitely besides the fact. So we see Twilio at $26. We were buying this back at, the low 20s. And we see this thing is definitely, running back up to that $30 mark. We see, it hit all time, or I would say it hit all time lows. And we're starting to see, CEO, or I would say insider buying coming in, buying back shares at really low prices. And anytime you see a CEO buy shares lower, that's typically a confidence builder for investors to go ahead and build up shares. And that's typically what you see here. We see a pretty nice bounce. I think 22 was definitely the low right here before you start to see, CEO come in, buy shares. Yeah, 22 was definitely the low. CEO probably got shares about 22.80 around $23. And this is exactly how you build up your position. This is exactly how you set yourself up for really nice gains. Anytime a company does get hit and you feel pretty, or I would say the outlook is pretty, looking really good, this is a time that you definitely want to buy shares. The only problem about Twilio was definitely the Uber situation, and that was just about it. That's pretty much what scared investors off. But we see that investors, they took time, read about it, and now they're starting to bid this thing back up. But what we see here is that Twilio is definitely up. Now, even though the market might sell off, we see Twilio definitely not being really affected by it. Or you might see Twilio turn positive, and that's something I've been taking note of. So anytime you see the market get hit, or there's a huge sell-off like we had one last time, I think it was about 400-point drop, Twilio barely moved 10 cents. So the sell-off really doesn't affect Twilio that much. And like I said, we want to be aware, take our homework, take notes exactly, how different stocks react to sell-offs, or these market rallies. So let's go ahead and see if we can go ahead and get some shares here. Okay, cool. Filled 99.70. And the reason I'm buying this is because I'm very bullish on NASDAQ, and we see 112 is definitely the high for this right here. And typically, let's see if we can fill another one right here. Great. Okay, so that's all we're going to buy. We got about 200 shares of the Qs. So 100 was definitely, a pretty good price. We're about $79 on it. That really doesn't matter. But we see Berkshire Hathaway, we're up about $1,200 on it. Like I said, guys, I buy stocks for long term. We can trade in and out, whatever you want to do. But as long as we have some long term positions there, building up, some, like I said, some long term wealth, we're definitely good. APC definitely had to drop it. We see for 146. Let's check out that chart. We see it's breaking down all types of breakdown right here. We see, you know, gave out at $50, kept going lower. Sorry, I wasn't able to check in on it. Like I said, I was in class, and I really like to make investments for long term, so that way I really won't have to watch them every single day to check in exactly how they're doing. I cut Disney after I seen it break a technical level that I really wasn't interested in being in it anymore. But over long term, the stock goes back up to 120 and probably sets all-time highs once again. Home Depot probably sets all-time highs once again. We see Home Depot hit about 153 or maybe lower, and we see that take right back off. I mean, people were saying that it's going to consolidate, and the thing, it's not going to do anything for a while, which we did see for about maybe like a couple of weeks here and there, and that's simply where consolidation was happening. It had a really good run. Now it's time to break back out and probably hit all-time highs once again. 160 will be the level to watch out for. We broke past that $155 level, so 160 is probably next. And we just have to see what exactly is going to break us or bring us back up to this $160 level. Also, what else do we have here? Take-Two Interactive, like I said, video game maker. If you guys were interested in buying video game makers, you can buy EA Sports. Their Madden 18, and along with their other video games, looks very good. You see that video games are definitely consolidating right now. They aren't really rallying like you always see them do. They do take breaks, and it's exactly what you're seeing. Activision Blizzard with the new Call of Duty. I think they're coming out. They're making a new Call of Duty, and the new Call of Duty looks really good. So if you guys are a gamer and you wanted to invest in any type of video game stocks, these are definitely the big top or the big three that you might want to look at. Like I said, Take-Two Interactive has the 2K series, the NBA 2K series, also the Grand Theft Auto games, and I think they're starting to diversify. And I think they bought Some Space Program. I think it was a couple days ago, and they really want to diversify their portfolio rather than just having being known for just having the 2K brand and also the Rockstar brand. And that's pretty much it on the video game makers. I am a gamer as well, but I want to be able to have an investment that I really love, and Take-Two Interactive was definitely one because I do like playing that NBA 2K and also Grand Theft Auto. We see Microsoft. We see the new Xbox coming out. The new Xbox looks pretty good. I have the Xbox One. Xbox One, 1 TB, and that's pretty good. But this definitely is one that people will be excited to go ahead and buy. So if you want to have a long-term investment, Microsoft is definitely one. But what I find super interesting about Microsoft is that if you go back a while ago, let's go ahead. Let me show you guys how to create a custom list here. We can make one. Let's see, add a time frame. We're going to go back 20 years. We're going to say we're going to buy a month. Yeah. Okay. Yeah, time. Cool. Okay, that's how you create a time frame. And let's see if we can go ahead and get it. Cool. All right, so this is what I wanted to show you guys. We, as we went far back to Microsoft when it hit an all-time high of 159, what we see of Microsoft is that it's breaking out, hitting all-time highs every single day. Just about 172 was definitely the all-time high. But what we see is that something has awoken, or something has woke up Microsoft and started letting it hit all-time highs. Now we're about, we're about to hit that $20 level, to where we're about to break out and hit, go past and probably hit $90 or $100. Microsoft will definitely probably split sometime soon, but this is definitely something that you want to look into. Microsoft, we all know about Microsoft Office, Microsoft PowerPoint, Excel, spreadsheets, all that. That's something that that people do use on a day-to-day basis. Something else people do use on a day-to-day basis, we have Adobe Photoshop. Adobe Photoshop definitely coming down at those all-time highs. We see that, we formed a double bottom here. We see the double bottom here at that $130 or 130 level. 130 last time on the big sell-off that we did have on the technology stocks. Also, we did see it bounce right back up. So we know that 130 is definitely the level that, or the technical low for this stock for it to bounce right back up. I'm pretty sure a lot of technical analysts were buying shares of Adobe because, like I said, Adobe is something that we use every single day, or depending on what you're doing, you might use it every single day. The power, or I would say the PDF file. Yeah, the PDF, the PDF file as well. If you guys are using PDFs, and you guys should just definitely take a look at the balance sheet for Adobe Systems. So this is definitely a no-brainer when you do look into buying stocks. You want to have something that's steady, but the only thing about Adobe Systems is that it doesn't pay a dividend. But you definitely guys can look for dividend stocks to get over that hurdle and probably get into Starbucks. We see Starbucks hitting really, I would say getting hit really bad. But I see the stock as my dividend play. I don't see it as a stock that has a lot of growth. Even though it doesn't have a lot of growth, I see it as a dividend play. So I might just keep buying this for the dividends, honestly, and also for the growth that it does have, being able to reach, the Americans, being able to have, I think it was starting to open stores in Jamaica as well, and there's just a lot of overseas opportunities for the stock. So we see that 64.87, we hit an all-time high. And anytime we hit an all-time high, that definitely makes me confident in the stock. So when you see the stock hit an all-time high, and just after that, just days and days and days of red days, bringing us down about $5. And like I said, this is definitely something that I really don't like to see. But at the same time, we see the momentum is definitely coming back up, and we should see it hit 165, or excuse me, $65 and probably go to 70. But this is definitely a long-term stock. But I do like the dividend. We see the dividend is definitely increasing each year. So let's go ahead and take a look at 20 years. Oh, whoa, too far ahead. But we see the dividend start at 26, 32, 16, 20, 25. So we starting to see, the dividend is starting to increase once again. And that definitely makes me confident in, the company anytime I do buy the stock. All right, guys. Sorry about that. I have to take a call right quick, but we're gonna definitely take a look at Snapchat. We see Snapchat breaking below IPO price. What do we? Snapchat is definitely a company that you do not want to be in. I don't know how many times I can stress that. People are still looking at this as an oversold story. This is definitely not an oversold story. This is definitely a stock that you might want to be running away from. We see oversold here. They're able to get a symbol really cool, but we see that $17 is now being broken. So now we see $20 is being broken. What do we see? $20. Now we see 15. Now we see 10. Now we see 5. But when this lockup period for the inside investors to go ahead and sell shares, this thing is definitely going to get rocketed down to $10 or maybe 13, probably, honestly, in my opinion, because people are not going to want to hold on to this thing now that we see that advertisers are starting to get discounted. They're starting to pay Snapchat discounts, or whatever Snapchat is doing. It's a really horrible look for Snapchat, because when I use Snapchat, I really don't look at the advertisements. I'm definitely just flipping through the stories, and sometimes I do get a commercial here and there. Well, I do flip through the story, and once I get a commercial, I kind of exit out of that and keep going. But there's really no growth here. I really don't see any growth here for Snapchat, other than its free platform. I'm not sure what they could do to turn this company around, but that's something that people really invested in. People might be buying share. Like I said, there's somebody in here that bought shares at $29.44 and still in this thing believing that, it's going to go to 30 or it's probably going to go higher. So there's always people losing money. There's always people making money. So you could have been the person that shorted this at 29, or I'm sorry, you couldn't short because that would have been illegal, but you would have probably been able to, sell shares right here at 29, probably ride this dip right here, come back up, sell shares, but that's definitely besides the point. But the investors who were buying shares of Snapchat at that IPO level of $17 are probably now irritated that Snapchat is now breaking below the $17 level and probably going to $15. So this will be an investment that actually did very, very horrible. And I keep getting notifications about Snapchat breaking below IPO price for the first time. This stock is definitely going lower. We see it try that level right here, 1745. We see people come back in, buy the stock back up. I wasn't really convinced that this stock was going to run back up to this $25 level, $23 level, and we started to see people go back and sell the stock once again. So this is definitely this is a momentum. This is a trade type of stock right here, and I don't see this thing being investable, for a while until they actually get their story together. But we see Facebook definitely taking advantage of Snapchat, and Facebook's definitely at a discount right now. We see Facebook hitting about $7 from the all-time high, 155. We break 155, we go to 160. And this is definitely a stock that you might want to be into. And especially if Facebook starts to pay out a dividend over time, this might be a stock that you might be interested in. So in order to buy Facebook, you definitely want to, look and see about the balance sheet, income statement, all that good stuff to understand, if you're going to make your money back or how long it should take you to make your money back. So let's check out XLK. Technology sector. If you guys wanted to buy Amazon, Apple, Google, all those things wrapped into one, we see the XLK come back to that $155, or excuse me, this $55 level, and we're still at this I would say technical low just about. 54.79 is definitely the low right here. So anywhere around this $55 level is definitely where it should hold. We can look at an increment of value as being $5, $10, 5, 10, 15. So we can look at it like that as an increment of value. But if we're looking at it long term, we can probably say $60 would be the next all-time high for this stock. We see this big drawdown is because the Nasdaq did have a selling, I would say a sell-off. I'm not really sure what triggered that sell-off because I wasn't in class, but I did know that Nasdaq did, have a huge sell-off in those big technology names. Amazon hit 1,000 for the first time, and what we see from Amazon definitely coming off those overbought levels. Now, what we can see right here from definitely seeing all of the big cap tech names is that they're no longer overbought. They've come way off of that overbought level, and they're no longer overbought. So you might want to get in when these stocks are definitely not overbought because, like I said, Apple, we see Apple, 156, 153. We're waiting for this thing to drop. Once we see a drop, we hit 150, right? So we're chilling at 150. The stock wasn't really doing nothing. Then we see the huge sell-off, bring this thing down to 140. So we start to see the thing sell off. We're almost at that oversold level for Apple. So it might be time for people to go ahead and buy some more shares. Or if you were looking at the XLK technology sector, instead of buying, individual names, you can buy the group name and definitely get into the technology sector. We see it's the financials. Check out financials. Definitely moving higher. We're, raising interest rates. But, that's all I have for you guys. I might have a video for you guys next week or maybe sometime soon, Friday, if something were to happen that's very, very interesting. But we see for my positions, I still hold my positions like I had them a long time ago. We have AMD. We're up about $100 on that. Really not doing nothing. Berkshire Hathaway, like I said, guys, Berkshire Hathaway is definitely a stock that you want to hold long term because it definitely goes up over time. This is not like a penny stock that where it just takes you on a seesaw. This definitely goes up over time, no matter what, because those investments are steady. And Warren Buffett does make really good investments. And you just definitely look at the return on the investment to understand what kind of company you're investing in and things like that. So we see Honeywell, Home Depot, Lululemon, Oh, remember I said Lululemon, it hits 54, goes to 60. So we see at 53, we have about $100 on that position. Starbucks, I'm still in this name. I really like the company. I'm going to definitely stay in the name and probably buy more on any more sell-off that it does happen. We see the triple Qs, definitely leverage NASDAQ play right here. This is definitely going higher. No matter what, this is definitely going higher. They, might issue out a split before the year is over because this is definitely probably going to pass up the regular triple Q. And we see Take-Two Interactive video game maker. As soon as I get up this video, I'm definitely going to play Grand Theft Auto, maybe 2K, depending on which one. Depending on how I feel. But Twilio, definitely another stock that you guys might be interested in. This is definitely long term. So all these stocks that I have bought are for a long term. I really like them, and I see that we're going to be able to beat the market. Just by owning at least one of these stocks, and owning a group of them definitely puts you ahead of the pack. Remember, you want to be able to beat the market. There's no competition against other people to see exactly, I'm going to get 1,000% this year, blah, blah, blah. You want to be able to meet your financial goals. Not a lot of people want 1,000% this year because they don't want to take on that crazy amount of risk. So make sure you guys are setting your financial goals, meeting your financial goals for each month, maybe each week, or maybe even each day. So that way, you don't have a lot of stress on you to, become very successful, or try to become very successful, or probably try to beat out different people that do post things on YouTube and probably show off a lot of things. Remember, your time will come. As long as you're doing your homework, as long as you're understanding where the charts and patterns are taking you, you definitely will be heavily successful in the market. So take care, guys.